Welcome everyone to the Kendall Report. Thanks for your patience getting started. Having trouble with the studio lights, so I'm a little having control with that. So sorry about the delay. I was dealing with technical issues. Anyway, let's go ahead and get into tonight's report. And there's a fair amount to talk about. I think I'm kind of exhausted over the last. This is the fifth stream in a row, by the way. So I think one of the things that we have to acknowledge here is that everybody's getting a little bit exhausted. The amount of volatility in trading and the intensity of just even watching the trading right now is enough to exhaust one. And I'm usually pretty resilient. I've been doing this for a long time. Even at my age, I can usually stand a lot, but it's pretty exhausting. I've showed you folks the order book. When I'm trading, I use the order book predominantly to make a lot of decisions, and it's impossible for me to read. And at the moment, and it remains that way. We're still that way tonight. Tons of volume, but the scatteredness and the erratic patterns that are out there right now are pretty difficult. So I'm not sure when this is going to be able to come in line. So let's go on to something that I've been talking about here in Substack, and it keeps coming up everywhere I look, and we'll try to dig into this a little bit. But I'm watching all the tariff situation. As I told you last night, there were a lot of folks on Twitter and on the channel. I actually been please make comments, and especially it's easier. These comments are cool in the live stream's going on, but the comments that come in on the replay are very helpful. Give me a lot of insight into market dynamics, believe it or not, and I've been pretty active in trying to answer a lot of you. So if you have issues and questions and whatever, go out there. You guys know the rules. You can disagree with me. It's fine. You just can't call me names. You can't do those kind of things. And so we try to keep this community really, really good. I have overall I've done something like I was looking the other day, 6,100 videos, and I have a average like ratio of 98.1%. So I try to keep it clean. Keep everybody, there's a lot of things we all want to say. Trust me, I have plenty that I would like to say, but I don't. So, but let's talk about this situation that keeps coming up, and what's coming up about it is, the tariffs. And as I said yesterday, nothing really changed other than they basically put everybody on 10%. Looks like the dust is settling. Looks like there's some noise. I see Abbey Rhodes talking about Brexit and some of the guys insider trading on the Trump deal. I don't know. We'll see what washes out of that. The important part of what's going on right now is trying to get rid of all this fraud and waste and get government spending down and get efficiencies going and try to get all these new, we'll say, industries and things that are going to expand over the next 10 years to get the foundation for that to happen. But here's the risk that I'm seeing right now, and I'm just going to put a chart up on the other screen. I may bring it up depending on. But I talked about this yesterday, and to watch the treasuries, and I even mentioned it in the Substack. And if you don't get the Substack, it's kendallreport.substack.com. There's a free trial for a week, I believe. It's $8 a month, or annual is $80. But this treasury situation could be really a powerful tool for China. And, I'm hoping, Scott Bressett's an old trader, worked with Stanley Druckenmiller and George Soros. So this is kind of scary, but he knows the markets, that's for sure. And obviously Howard Lutnick knows the markets So we got a bunch of market people around, and I think that yesterday when they made that comment is that the treasuries were really starting to tank pretty heavy, and there's something to go on there. But here's the weapon that China has, and I just probably continued theme. I don't know for how long. A lot of times I get on these little threads, and it's hard for me to break away. But I want to watch this closely because what I'm seeing in the technicals and in the quantitative stuff is telling me to pay attention here. And I always look for, as you folks know, I'm always looking for something where there might be an event or something that could trigger something much, much bigger. And so the leverage that the Chinese have, think about this. I mentioned that movie. Thanks for everybody finding out what the name was, but Rollover, 1981, Kristofferson and Jane Fonda were in there. And I was watching some of the clips from YouTube. I thought, it'd be kind of fun to watch one of these clips with you folks and discuss it, but we'll just keep it. There's some clips out there, and there's a couple, and one is a discussion. And back in the old days, in 1981, when I was first starting in this business, the boogeyman in the world markets was the Saudis, and now it's China. So in the 80s, it was the oil, and now it's the big trade in the manufacturing and everything in China. And you can see there, China really is the focus of what's going on here from the standpoint of what's going on the tariffs and everything. All the other stuff, the EU, yeah, but China, right? So they go down, they take the big ships, lots of airplanes, and they go down to Panama. Basically, hey, we want to talk and put a deal together. We need China out of here. And so it's another China thing where they need to block them out everywhere they can, including Greenland. That's what Greenland's about. And so, what happens? They're a big adversary, and they own a bunch of your debt. What if they start selling the debt? So that Rollover movie was about the Saudis pulling all their cash out of the banking system. Banking system was collapsing. It was funny. I was watching this one scene. Somebody goes, "Gold's at 2,000," and the guy goes, "That'll be nothing. That'll be cheap by tonight." And it's funny because we're trading 3,000 gold, right? So mysteriously, from 1980 to currently, you've got artifacts all around that we look at all the time that are warning signs to the system. And I've said this before, that I believe the system is quite fragile, especially in the digital world. I went through some scenarios in the last several videos that I've done, just discussing some of the mechanics and things that are likely to that could influence market flow, money flow in and out of the markets. And with things disrupted at the level they are right now, if the treasuries were start to spike even further, the pattern, I'm going to show you this in a minute. Matter of fact, let me just bring it up so we have a background here. But you can see this is a treasury chart, and this is a daily chart, but you can see we spiked up in the midst of it. What was interesting, typically, when we're seeing an inverse reaction here with the Treasury. So somebody's selling these things, and are they just incrementally doing it? Is it the big sellers? I don't think it's Japan right now. Japan's always got this big carry trade going on. I don't think that's what's going on in this particular sequence. What we're really looking at is there's some outside sellers coming in here, and I'm going to watch this very closely. My oh shit moment, okay, will be if we print above around 471, 472. That is we'll call it the high level, high water mark. If we break through that, then we're probably going to see 5+, and it's not what people are talking about. Usually, if you have if you get treasuries going up and the market's going down, that's going to be the worst of all worlds. Because think about it. I worked with a lot of advisors over the last almost 3 decades, and they all come out with this 60-40 portfolio. Well, bonds haven't been, I think it was 2017 that proclaimed that strategy was dead, probably forever. It's even more dead now, and it's not going to work for people like they thought, because the bonds are where the risk are right now. So equities have pulled back. I think I was looking, we're about 15% off the highs of the S&P right now, and we're probably the treasuries are still within the context. Let me change this chart a little bit. Let's go over to a weekly while we're talking about this particular situation. And let's just bring it out. You can see we've really been in a range going back to 24. Let's go back a little further. We go back to 21, and then we get this big rally. But since 21, 22, we've spiked out of the top end of this range, and the bottom end of the range has been roughly around 360, just round numbers, okay? 360, 460 has been those numbers. But if we start to break above there, and the reason why I brought up this weekly chart, notice there are 3 fib targets out there right now that are still live. And the upper target is 492, 514. That's these marks right here. Let me just bring those up so you can see a little bit. But right here, so we got up to this middle level of just close to the 494 level, but these are still valid. And typically, what we're going to get, you can see this big reversal on the weekly charts. If this stays through the week, I mean, it's Thursday, one more day. And we've got, and we'll go through, and I'll talk a little bit about the CPI numbers, and as we come into the PPI numbers tomorrow. But this here is, I think, kind of the no-go zone. If we get above that, and then we start to see something even more scary. I'm going to go over to a monthly chart. And this is where it gets scary. And listen, some of you have been around for years watching the channel and talking about things. I always caution everybody, if I mention a number, it tends to go there fairly quick. So, but I want you to look at this monthly chart here. Let me get off screen so it's a little cleaner. If we just look at the chart, we're not looking at any indicators or any momentum, but we do have these fib targets up here, which right now are 536, that's this number here, 601, this is up here, and then the extreme is 642. And this starts so I always do this thing I talk to you folks all the time, is the reverse fundamentals. So I do the technicals. We're going to look at the indicators here in a minute as well. But when I look at this type of event, what are the probabilities? I always have to ask, is there anything that we can see or anticipate or possibility or probability, we'll use a better word, that could get us to the point where this could happen? What would those things be? Do they exist? Do we have to make them up? Do we have to act like Peter Schiff or Harry Dent or somebody and make up some scenario that could get us there? Or is there actually something out there that could happen? And so without making anything out, the Chinese, their only weapon they have against Trump right now is that they have to be able to sell these securities. So I'm going to play out a scenario. I kind of backed off of it last night. We may get into this. We're already 18 minutes in. We will probably get, this is probably going to be a big feature. I got a couple other things I want to talk about, and then we'll get into some charts and some analysis. But this situation if we were to print, think about what's going on right now. We have we're working on 37, 38 trillion dollars worth of debt. And if we were to spike up into just this level here on the 10-year, would be disastrous. And we have to kind of look in the rearview mirror, because there's something that happened a number of years ago. And I always give Rubin, one of the best Treasury secretaries during the Clinton administration, and he basically shifted us over to everything was concentrated. It was kind of the European model of central banks and governance from financing debt, and it worked really well. And in fact, I think the last time we balanced the budget was during Clinton days. And so we moved all of our financing over basically into what we're looking at here. And of course, now with the debt, we used to, I just want to do a little history, then I'll bring it back in. But for years ago, when I first started in business in 1981, 79 is when I started, but in those early days, they used to do quarterly refundings, where they would do these big batch of securities every quarter, and we'd find out, the Treasury would come out and say, okay, we're going to refinance this. Here's what's maturing. Here's new paper, blah, 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 right? So we would look at that. That's every week now, folks. Because of the debt, it's so big. We have a refunding every week. And so the stressors, we had a good 10-year auction the other day, but the stressors on this market are also just very, very fragile. So I've looked at everything. Equities are equities. I've been a bond guy for a lot of years, and equity traders think much different than the bond guys. The bond guys are finance guys. We're always wondering, are these guys going to pay this money back? Is this stuff going to default? In the case of the U.S., it's always been, okay, treasuries, they're not going to default. So I'm not talking about any kind of default here, but we are talking about something that I believe could be a very big dislocation of capital, and from the standpoint of if there was a big seller coming in, who's the big seller possibilities? We'll just, the top two are going to be Japan and China. I think Japan has a slightly bigger position, but not by a lot. So with this, I'm getting to the point here, folks. Hang with me. So with all of this stuff that's going on with the tariffs and Trump punching these guys at 104 and they're punching back at 84, all the trade stuff, that's one thing. But I think China has they've got the big gun, and and the Treasury position. So now I'm finally to the point, and this is where I'm going to get to the hypothesis of what I'm trying to say. Let's say they decide to use that as a weapon, because I believe we're right now in a financial war with China. I think, does it escalate to shooting people? I don't think so, not at the moment. But we have an economic war going on. And all of the other scenarios that I'm seeing around here are just noise. Europe is fairly big, but everything else, no one really cares about any of this trade. Not that they don't care, but it's not material. This is an attack on China that Trump has launched, and it's a financial war. And hopefully Brexit, and these guys are smarter than they look. I wonder sometimes. I was real impressed with Scott Brexit early on. I've seen a couple of interviews. I'm not seeing the sharpness that I was hoping to see. Rubin style. He was. If you go back and watch some of that stuff, it was pretty amazing. But my concern is that maybe these guys didn't think through everything. Maybe they did. Maybe they said, "Oh, they'll never do that." But I just want to play this out, because I think we're not even going to have to be that smart to figure it out. The Treasury market's going to tell us if what I'm saying right now is, this would probably be, unless we see signs from it, will be the last time I'll probably talk about it, unless we see emergence of some of these events that I'm talking about happening. And those events would be that the Treasury yields start to spike up. Gave you the number earlier, 370 372-ish. I know it seems like an odd number, but that's kind of the number. If we get through that, there's not going to be, if there's been enough selling to get us to 372, we got other problems to worry about. And then all of a sudden, this chart that I have on the screen suggesting minimum target 538. I'm just giving you targets again. 601 and 642. That's 6%. That destroys the housing market. That takes everything down. It's over. Okay. So I'm hoping I'm not coming across as this doomsayer, but I do think you need to pay attention to this market, and I'm hoping it just stays in this sideways range it's been chopping in, going back to early 23, 24, when we were in the height of the QT and the Fed tightening cycle. That's going to be it. So having mentioned the Fed, I'm going to go there. They got nothing on this. There's nothing they can do. You haven't heard much from the Fed, and you're not going to hear much from the Fed, in my opinion, because the Fed doesn't have anything they can actually achieve by doing anything. I think they will lower rates a couple times this year on the front end of the curve, but this back end of the curve is everything. You folks have been around the channel for a couple years. I've been telling you, the back end of the curve is not going to come down. It's going to stay in that 4 handle. And my low number has been around 360, but more 395, 440 on the ranges. And that's where we've been, and that's where we are now. So 472, we start to see some serious movement, especially if it's very quick. There's a couple of things about markets, and we saw one yesterday in the equities where you got this stampede where this monster move came in. I mean, for me, there was no way the follow-through was going to happen today. All of that buying was short covering. There was no new buying. Nobody bought because they thought the market was good yesterday. No one. And finally, last night in London, I sat here last night with writer's block right after London Open. It was about 12:30 a.m. last night. And I'm getting ready to write the newsletter, and I'm watching this thing trade. And it was, it's just crazy how equities are trading right now. And I think they're still very dangerous. And we saw what our data sheet last night was projecting 51 handle, 51.39. I think we got to 51.40. We bounced pretty good off of that number. But the level of volatility, that had the highest probability last night of being reached on the data sheet. I'm going to try to run the data sheets here in a minute so we can talk about it. I think we could spend a couple hours tonight. I was like, I'm not sure how well prepped I am for this meeting, but this scenario I'm talking about is big. So 372, we break above that. Watch the action. If it moves too fast, this is the point I'm about to make, what we saw yesterday. When markets move really fast like that, it destroys capital. It doesn't create capital. I don't care if it's up or down. Not in the derivative world. Okay, I've been around. I started CBOT in 1979. I've been a derivatives trader my entire life for 45 years. And when markets go too fast, people get hurt, capital gets destroyed. And that's what we saw yesterday was not like some new yay, hurrah. We saw actually blood and guts. If you could have seen if there was a such thing as a trading floor like in the old days when I started, there would have been blood and guts everywhere. And half of the pit would not have showed up today. Okay? So that's kind of where we are on as far as that stuff. But this Treasury situation, it needs to be watched because that's the only place China's going to be able to retaliate. And why would they retaliate at this level? Because Xi Jinping has no power. Listen, the Chinese fear their people, I believe. I spent a month in China back in 2003. And it was fascinating to be there. I traveled to multiple cities, and what I can tell you is I said then is that they figure out how to digitize this place. It's going to be amazing. This was '03. They figured it out, and it's amazing. There's a lot of things, but they fear their people, and if this thing gets disrupted to the level that jobs are starting to disappear in big numbers in China, they could lose control of that. They've got a lot of bodies running around there, and I think they fear their people. So the only way to keep them happy in this new environment that they created over the last 2 decades is to actually keep people working. So their only way they're going to be able to attack is not through trade so much. They're using trade at the moment. My fear is they hit the wall, they start losing jobs through the trade deal, and then they start selling bonds. So I'm still trying to get to my main point, believe it or not. So the main point is this, is that if that were to happen, let's say the Chinese started mass selling securities, and we're seeing that happen. What is the Fed? What's the Fed? What is the Treasury? What is the White House? What do they do about that? I've tried to think through this fairly well, but they have to stop the selling. And how do you tell somebody that owns something to stop selling? Well, you don't, right? It's mine to sell, so to speak. And the result would be is they'd have to freeze. And I made this basic claim in the Substack last night. They would have to freeze the assets so they couldn't be sold. And if they did that, what would be the impact of that? Now we got the domino effect, and it gets real ugly real fast because now no one trusts the U.S. government. No one wants to invest. This has been the, I'll do air quotes, safe haven. All of a sudden, all that stuff's gone. I know this sounds like a big disaster, and I'm not even saying it's going to happen, other than the fact we will know if it's happening based on this Treasury move, because it will get out of control very, very quickly. And nothing else will matter outside. I think the only market at the moment to watch is the bonds, and particularly watch this. Let me see if I can put up something here. Sorry for that long rant, but it's been coming up multiple times lately for me. So this is the Treasury futures. Okay, this is where I cut my teeth in the. This is the 10-year, but in the 30-year is where I cut my teeth back in the CBOT back in the day. Good news is this is the inverse chart of what we were just looking at from yields, and this is why this is so important. And this is the monthly, and we also have just like with the monthly yield chart, we have downward projections for the ZN, which is the 10-year Treasury note futures. And this is looking at a 96 handle, which pushes. I believe these are 6% coupons. So that puts us under that. That puts yields over 6%. That's the same calculation basically in inverse. So I'm hoping, and let's bring up. I don't have enough data here to get the algos to work, but it looks to me we're kind of hitting peak values. Let me look here. We've got a decent, this is a monthly chart long term, so we have a decent amount of stuff going on there. So I just want to make sure I finish the thought. I know we're 30 minutes in, but I will look at some of your comments. I can see the line's been fairly active, but I've been staying focused on what I've been trying to get out. So the result of everything I just said is I'm not predicting it's happening. I want to watch I want to know that certain elements are happening. So we make new lows on this ZN on a monthly. We make new highs on yields, not even new highs. Around the breakout point will be just a little bit above the low here. And on a yield chart, it'll be a little bit below the peak yields. And that's going to be, like I said, the number I'm watching is 472 on the 10-year. If it comes up, then, we'll be talking. At the moment, just so you know, those of you who've been watching and coming back, channel's coming back really strong. I know I was gone for a number of months, but I'm going to continue to do things with the, I'm going to keep doing dailies here for a bit. We'll see where we end up. I know middle stream after 30 minutes, should have said this up front. I am doing a 1 hour live show tomorrow, and I believe it's 2 p.m. Eastern time, which will be on how to become more of a portfolio manager type rather than trading indexes and speculating on that stuff. All right, so let me look at a couple. I think I got everything out I wanted to get out. Yeah, so I'll save the gold one. I will come back to that. Floyd's Garage, I will come back to that. There's a whole lot of stuff that could be talked about. I could go into, what was his name? Peter Zahan, and talking about, the demographics. Demographics are horrific for China, and they're horrific for just about everybody. Japan has been kind of the leader on that. I think they lost 680,000 people last year to demographics. So when Elon Musk is yelling, hey, we need to have babies, Although it's interesting because I was out and about around in the public in the last couple of days running some errands and stuff, and I'm seeing a lot of young people with babies. So they're still making babies, so that's good. Are they making enough? I'm not sure, but anyway, let me just look at a couple comments here. The stream, somebody's asking, it starts at 8 p.m. Eastern. Actually, somebody said 7 p.m. 8 is when. I'm on the West Coast, so right now it's 5:41. So we're going to look at a couple of things here. Let me look through, read a couple of these comments. Yeah, that's a really good. I'm glad I read through this. So when they sell, who's the buyer? That's a great question. Earth Cruiser GT. Guess what? That's what will kill the market, is if there's no buyers, and the buyer doesn't want to buy much. And that will, if you watched last night's video, I went through what the mechanics are of what causes price discovery, what causes prices to move. And what we saw yesterday is a good example. I'm not going to go deep, but a good example is there were no sellers yesterday. That's why you get 11% plus move, because there was nobody selling. Everybody was buying. There were few, but that's why prices move so fast. So the answer is that even is worse if there's not a buyer. Well, the buyer could be the Treasury. The buyer could be the Fed. There are buyers out there outside of institutional types, but that's where it gets scary, and that's why I'm telling you to pay attention to this. And like I said, I'll say it 50 times, so at least it'll be in the video. I'm not saying it's going to happen. I'm saying there's a risk if this risk comes into play, and I haven't even equated what this means for the equity markets. It's not good. I put up with a lot of trolls and people telling me yesterday how much money they made and all that stuff, and that's great. I'm really happy for them. But there are people, we missed a big opportunity. I don't know. I think we will retest the lows that we printed a few days ago. I don't think it's over yet. There's certainly going to be a lot of consolidation and all that. So let me try to get on track here, folks. Yeah. Let me just look here. There's a couple. Let me look through. Bear with me a second. Somebody did super chat. Thanks for the breakdown, Bob. Okay. Yeah. You're welcome. Thank you. Appreciate the $20. Appreciate it. Yeah. So where do we go after that? I kind of set us up pretty bad. Let's do this. Let's just couple things before I bring up the Treasury. I want to see the nightly run for the database. Okay. So those of you, if you have not been around the channel, I have one legacy database, and which is this that I have up here. This has been around for over 25 years, but we track 14,712 symbols, ETFs, individual stocks, mutual funds, all kinds of junk is in this pile. We maintain this, so we put buys and sells, and we do all kinds of quant stuff. So this we just ran just a few hours ago over 10 million calculations on that environment that I just talked about. So this is the results, and it's it's interesting because the meter's not. I'm going to reload this really quick. Okay, there we go. Yeah, I was worried about that. There was still 1039, so we're at 10.62 here. Look at the no traction. We're down. No selling. What happened the other day, has been happening for the last several weeks as we've blown out the database. We were well up at 58%. If we go back 2 months ago, 8 weeks ago, I'd have to look at the numbers. But we've just been selling on a short-term basis, and we're down to 10%. So 9 out of 10 items in this database have no position. And like I've been saying, we got a slight positive rotation, but it's a joke. Basically, if you add it up, I mean, we're looking at what, 300 symbols are even affected. So what happens is these models look for patterns that are likely to, not likely, or probable to appreciate. And every symbol in this database, this is what I'm going through tomorrow at 2 o'clock. I'm going to bring up some elements. It's going to be just a high level. I'm trying to get this so you can at least come out of tomorrow's meeting understanding. I'll probably do at least one more meeting, a meeting every week as planned at the moment to bring in this perspective. But every symbol in this database has a probability map. It has all kinds of statistics, and it goes back to the first day that any of these stocks were on the, existed. So first day of trading till current, whenever that was. Or the beginning of this database starts in January, I think January 2nd of 1980. So it goes back a long, long time. So, but the point is, we're not getting any traction, which I don't. What I was arguing yesterday is that we're not going to get any traction. So if we come back, I'm going to go over here to the daily S&P. Finally, we're getting into the flow here. One of the things that I told you yesterday, is try to get this scaling so you can see it, is this has already started happening where we get this big expansion. If you recall, all of the algorithms they're going to be, because of that one day in the middle, that big bar has disrupted the flow of the machine learning because it's influenced it. And if you think about it, it influenced everybody, whether you're an algorithm or you're a human. You were influenced by the rally yesterday, and it made you think, well, maybe it's going to go higher here. That was a big event. The algos did the same thing. But one of the things that I've been using all of these techniques for decades, and this market grid was built in 1992. So it's been around my daily trading and all my trading and decisions made since then. But what we got here is, and what I talked about yesterday, is this market grid, these orange big orange lines here. Let me just make it a little more dramatic. But these lines will actually collapse over the next several days, and finally the volatility will come back in. Once volatility normalizes, then you're going to be able to pick a direction. Right now, you're looking at ranges. It will be at least a 5 or 6 days, possibly more, but probably around 5 days, trading days, that we will get this normalization that I'm talking about here. And if I bring back the indicators, they're still forecasting short term that we're going to stay stable in a range. It's not projecting new lows here, so that's not the case. But we are looking at this pattern and consolidation to happen. And the database I was just showing you, what that's going to get you to understand is that you need participants in a market to get even the indexes. Even though the indexes are heavily weighted, we could bring up a Meg 7 account or something, look at all that. But if we look at the broader markets, and that's what has made my analysis unique for a lot of years, we look at the broader markets. When we see what's going on with the broader markets, is there's no participation. In fact, I didn't show you the intermediate, but the intermediate's down under 20. Only 1 out of 4 stocks is participating there, and I think it gets smaller tomorrow. Every week, every Friday, we run those models. I think we get more selling coming out of this week, and we're going to see more contraction and everything. We have one sector long, which is utilities. I think it's going to be out very quickly. And then on a short-term basis, if I flash back over here for a second, is we have no sectors long. We right now on groups, we have 12 groups. Let's just see if we can see what these are industry groups. So we have 12 groups that are still long: alcohol and beverage, beverages, communication services, construction services. There's 12 of these, and these are all short-term patterns. But even in this, there's a fair amount of things going on there. Okay, so I'm just looking at the clock here, 46. So let's. I'm trying to, for years I've run this channel. I think I saw something. I was looking at my channel statistics here, and I think I saw something. I've done 6,100 videos, and that's a lot of videos. I'm not sure that's the right number here, but I did see something along those lines. I saw a number somewhere. Might have been on my app from Apple for the channel. But the point is that this what I've been doing is like just market analysis. I'm trying to bring in some depth in these situations that we've been in. I have to kind of bring this perspective to you folks. Is people like to go and compare charts from 1929 or 87, whatever. Some chart, something that happened in the past. There's some guy on, and he works for a big firm. I'd be embarrassed if I was a big firm. I'd get that guy out of there. I'm trying to remember his name right now. I'd not really want to roast him on that level. But they put all the markets and overlay them and like pick which line. There's like 70 lines of different colors in each markets. None of that stuff matters. Like trying to put a matrix on top, and this one looks like the matrix of 1943 to 19. Don't do that, okay? The rear view mirror is not going to help you. Every one of the scenarios, we the other day I showed, I'm not sure I have the, if I still have it up, I'll put it up for a second to discuss. But I the other day, we're going to do two things here in a minute. So the other day, Yeah, so I'll bring this up real quick just to discuss it. This is all of the crisis, the panic of 1893, the 29 crash, 73, 74, Black Monday, which I was around for. There was actually an event in 1981, which doesn't get listed. It was pretty big. Interest rates were 25% at that time. But all of these events, and this is my point of bringing this up, all of these events were different. None of them were the same. And there's something else that happens as technology and society and infrastructure, financial infrastructure, everything moves forward. The event that caused 1929 is not going to happen to today. And it's kind of funny when looking at I talked about that movie Rollover, 1981. Kristofferson and Fonda, I think, were the big players there. But I watched some of those clips, and maybe I'll put a link to some of those clips in the description of this video tonight. How's that sound? I'll put something out there. But they're not funny because, like I said, the financial boogeyman in 1981 was the Saudis, because they had all the oil. The oil was the big power in society at that time. Well, that's now it's China, and it's trade, manufacturing, all the stuff that we see, and financial and money in itself, right? So that's why I went through so much time tonight going through the China. I know it's going to be a kind of a long watch, but hopefully it's interesting, because the whole China syndrome that's out there is potentially big. But my point is that never look. You can look at what's happened in the past, but just know whatever happens today is not going to be the same of what happens in the past. I mentioned the other day, I actually responded on my Twitter account to an article that Ray Dalio put out on Twitter. And basically it's, we're going back to the dark ages, and the way that humans responded in the dark ages is the same way they're going to respond today, which is not likely at all. We don't do anything like we did in dark ages. We've got our iPhones, we got our devices, we have a lot more information, and we understand what's going on around the planet if you spend that time. So anyway, so don't do the analysis like that. Don't think, hey, this looks just like 1929. It's not. Like, maybe a chart could look like that, but even then, events can be similar. What is it? They resemble, or they sometimes will rhyme. History rhymes, it doesn't repeat. And, these dislocations of capital I talked about, the situation we're in right now, hopefully it works out for the best, because everybody loses on this thing that I'm talking about tonight. There's no winners. There's not there's not going to be a winner. If the bond market goes and these yields get to these levels, and there's other massive dislocations and other things, I won't go into all the scenarios. If all of those things happen, then it doesn't matter. You should be communicating from your cave, okay, not from your house. And that's my other argument I said in the Substack the other day, was if these people that are throwing out all these doomsday things, why aren't you in a cave? Why are you participating? Why are you trying to sell me something if you think the world's coming to an end? I don't think it's coming to an end. I'm just telling you there's cautions and things that I think they will get interrupted. And maybe I have to talk about this again on one of these streams. Let me just see here. Yeah, Jim Adams, I hope you're in Australia. Let me see here. Yeah, thanks, Crazy Eddie, for that comment. Appreciate that. Let me look. I'm not real time here. Let me look at one more thing, and then we'll close some things out here. Yeah. So this is I kind of opened a can of worms tonight. I apologize. It's a big one because sometimes these conversations don't end early. There's nowhere to end what I'm doing tonight because we probably should be looking at the dollar. The dollar looks like there's some potential weakness coming as well. There's other things, but the bond market will tell you everything you need to know for right now. But I mean, there's so many rabbit holes around that we could jump in and go down to try to unpack this. And I'm not trying to be by any means any kind of doomsayer here. My job has been, and we still manage well over $15 billion in the markets. My job has been and always will be is to look ahead and try to see what risk that we have and what should we be doing about this. I've navigated the 87 crash successfully, but more importantly, the 2000, the GFC, all that stuff. Probably my most impactful moment was during the GFC because I helped a lot of people, literally hundreds and hundreds of thousands of people, to not lose their money, which I'm very proud of that moment because we had a very large network of investment advisors at that time, and we got them out of the mess. We did some things, and we'll talk about it tomorrow. Just remember, I'll be doing a broadcast tomorrow, just product focused. I'm hoping that there's not a lot of noise in the markets that are going to have people showing up, and I'm just going to have to, ignore their requests. So I'm going to try to do something here. I've got this up. Bear with me a second while I try to put a couple things together. Okay. I wish we could. This is the one thing I wish that YouTube had, that there was a way to do voice, that you folks could ask me a question rather than posting me reading, because I could be doing two things at once here. Or maybe there just needs to be an app that can read these comments to me. So here's what I'm doing. I'm going to attempt again. I did this last night, and let me just see if I have okay. Let's try it again. And I'll talk about what's going on. But this is the fact sheets. They come out every night. Right now, they come out every night in the Substack. So I have one for S&P, one for NASDAQ, and one for Bitcoin. This was last night's Bitcoin deal. But I'm going to attempt to use this. And I've been like a little kid that got a toy and I haven't been able to play with it. But Anthropic and Claude, I've got their new Max version. I haven't had a lot of time to do this, but what I just did, it's behind me. Let me get off screen. Let me show you what I did. And I thought I was going to have this out by this week, but I brought up TradingView. I've got a group of indicators on here. If we look at the indicators in the invite only, I've got a bunch of, these are the ones that we sell. So kendallreport.com/indicators will get you there. But I believe there's 10 of these that are on here right now. So what I did was I copied the data window, okay? And then I built a script, which there's some things working on building a product that will do this and that will automatically bring in the data for you from that standpoint. But I haven't got that done yet. Okay, so but this situation here, what I built into this is there's a TSX file that I developed. It took me probably 2.5-3 months, and I've got it to think like me. So I know the analysis that I do. I built probabilities, all kinds of different processes inside of this little logic, and you'll actually be able to see. I plan on distributing this file, and I'm working on putting almost like a new newsletter together on Substack that you'll be able to subscribe, get the file, and then there's going to be updates and conversations, because this is going to be a big project ultimately for me. So what I did, I should have started this. So what I'm doing right now is I just clicked enter. So all of this data that you see on the left-hand side of the screen is going to be considered, and it's going to rebuild this artifact. It takes about a minute and a half. But what this is going to bring up, and this what I was talking about last night, is it's going to bring up the probabilities on, so the market grid that I put out, you see on the charts with the orange line I was talking about, every day, no matter what the period of chart, you could actually run this technology on a 1 hour chart, and it will give you trading parameters for that 1 hour. One of the things that I've been having issues with Anthropic and with Claude is I get these long chats that go on, and then it blows up and it blocks me out for 4 hours. So I've got the max. So they're telling me that's not going to happen very often for $100 a month. They got another level 200, which I'll probably do when they get it out. But this is kind of clunky right now, but we're going to take the same logic and then connect it to a database, and you're just going to be able to click a button and this sheet will pop up. It won't. What we're doing right now is running it from a raw file. But I do want to see what it is. We'll discuss it. I'm running over a little bit tonight because of the long conversation. But yeah, so while we're waiting for this, hit the like button. Just hanging out, subscribe, do all that stuff. I've been absent for multiple months now, so hopefully we get a clean run here, and we did. So so let me show you some components here, folks. So let me get off screen and I'll zoom in a little bit, because I'm going to review this with you. So this sheet over here, there's something else I can do. I'm going to publish this. Maybe for fun, I'll put this in the description tonight after this thing goes. Publish, copy a link. So the way I usually distribute this is I'm going to open a new browser link here, is I make a screenshot of it. So what I just did, though, this is this link. If you have this link, you come up and you can see the whole sheet, and it's somewhat over. I don't put this link out every night, but there's a couple things that we got here. We got 85% bearish. We got the trend strength, gives us the direction of the trend and the trend. I mean, folks, this is $8 a month. You'll have this on S&P, NASDAQ, and you'll have it also on Bitcoin. But what it's kind of interesting, because it's been programmed to it's been programmed to think like me, but it's also looking and does an analysis for you. In this thing I'm doing right now, you're going to be able to copy the image of this if you have Claude or even ChatGPT, free version. You don't have to pay for it. If you have this, and you could get it from the newsletter, you could take the image from the Substack, drop it into Claude, and tell it what kind of trade you want to set up. You can say, I want to do, based on this information on a sheet, I'm going to put all these prompts together for you. I'm an AI maniac. I may look old, but I'm younger in mind than I look. And I've been in on this for almost 3 years. The first time I could use ChatGPT, I think in the first 2 weeks it existed, we've been in here. And Anthropic as like certain things are just like the best, okay? But the point is it's going to show, it's going to tell what the analysis is. And I saw some folks, you can take, once you have the indicator data, you can take this stuff and throw it into Claude and ask questions about the indicator data and throw in images. I'm going to show you how to do all this stuff. Ultimately, what I want is a product that integrates with some other things that we're doing. This is a game changer, folks, I'm telling you. We could spend another hour right now just going through how to use this data sheet for trade setups, whether they're day trades or different types of things. We could run different lengths of charts. We can run weekly. We can run an hourly chart. We could run I tried trading one day, updating the chart I think I was doing it, 5-minute chart. I was trying to update it. Really every new 5-minute bar that came out, I had to, as soon as it came up, I cut and paste, put the data in, run. So it takes a minute and a half. So 30% almost of the 5-minute bar was gone by the time I got the answer. So that has to be sped up. But my point is, you can take time increments and use it for your trading if you're intraday trading. And this stuff is amazing because I'm going to break it down. Sorry, I'm excited. This is like one of the most exciting projects that I've worked on for a long time. And I told everybody, I've told all you folks before, the dangerous part is I can now program. I am in the process of putting transitioning, and actually I think I've done something really special in TradingView. I have got our models that we've run on our institutional models to somewhat emulate. TradingView, folks, is a great platform, but it's very retail, very limited in what you can do. There's other better platforms. TradeStation's way next level. There's a couple others that are really good, probably NinjaTrader, some others that have better logic. TradingView is not. The logic in PineScript is it's good to a point. If you're serious into quant work, you're not going to be very happy hanging around TradingView. But look at this. Wow, I've never seen this before, folks. I'm glad we're doing this live. Cycle position, panic selling. I've never seen that. Okay. Volatility high. Yes, it is. Trend strength, 9 out of 10. So it's as weak as it can be right now. And we're down 51 handles. I'm looking. I have a different marker. And I've got TradeStation over here. I still use TradeStation, and it's got a slightly different marker as far as where it uses the cash and futures close. I think TradingView uses the aftermarket close before the new session starts. But anyway, I think this is fascinating. And then down here in the PPMs that you see all the time, like when I'm bringing up a chart, I'm going to flash over that's these charts right here, and this is where this has got logic in there. So a minus T is downtrend. If uptrend, it tells you when it's in trend mode, maintenance mode, and neutral. Maintenance means that whatever the trend is, it's got the values. Like I said, I've trained this. Bob Kendall trained this to think like this is. We were joking that this app we're going to put together called Pocket Bob, but this is Virtual Bob, and this has been a fascinating project. I'm up to Eastern time. I very seldom. Sometimes I go to bed at 8 in the morning, so I'm up all night working on these projects. It's a time slot that I have. Down the bottom is just a marker of the moving averages. Last thing I want to show you is here's the market grid. This was the way it looked yesterday, by the way. 54.14, only a 15% chance to get there. 40% chance on S1, 51.94, where we at right now. I'm sorry. Yeah, so that's on the, I'm just looking at the market grid here. So we're trading above that, 52.14, 45. We got to go up the scale, 55.6, and then down here, the lows, 60% probability of hitting 50.72. If I brought up yesterday's sheet, this was the marker, and look at 75 for 49.49. That's a big number. We're 52. That's 300 points down from here. We're down right now 50 handles. So, I will run this again tonight, but I just did it on the fly with you folks so you could see this. I appreciate you hanging out to do that. But what AI is bringing us, folks, is the ability to have not only predictive but probability. So I'm an old school market quant guy, right? That have been doing quant since mid '80s in some form or another, and have evolved with technology over the last decades. Built multiple trading platforms, multiple modeling and portfolio management tools that have managed, $250 billion. And I have to tell you, this is like the most amazing environment. I used to I'll turn 73 this year, and I used to think, well, the world's so screwed up, I wouldn't want to turn the clock back and be 30. I do now because of this technology. This is so exciting to be part of, and what I'm hoping, and I'm working on some things to actually get this project to move much faster together. I've been working with some folks on multiple levels. So anyway, thanks for hanging out. We had quite a few people hanging out. Let me see if you have any questions. Green Garden. I've never seen that. that panic. I'll go put it back on screen. Cycle position panic, and it is, right. I mean, I'm looking over at the order book here, and the way that this thing's trading is how you trade in panic market. Now this has been 2-3 days since they really broke the market. I'm just looking at some questions here. This has been a fun stream. I'm glad I went through some of this stuff. Yeah, so I'm going to explain these. This is what I've been working on these sheets. I've got, it's almost becoming a book, actually. It's a manual how to understand all this stuff. So it's basically saying even though we're trading at those levels, like I said, I do these on the fly. There's a couple of things. One of the things that I do sometimes is I'll tell Claude could you please check the math? I see a couple of things. Yeah, I actually see a couple of things, and this is what I'm trying to write up, because at the moment this thing is not perfect because of the way it's being run, but it's got primary pattern S3X, which is maybe what it's trying to say is S3 to the extreme secondary target S2X. Whenever I see any language coming out of that, there's potential for some errors here. But the bottom line is, this is going to be, how far over? Man, 18 minutes. Anyway, folks, I really do appreciate everybody coming in. By the way, the music at the end, I put that out on Twitter. People are commenting they like the outro, intro music I'm using. Well, you can have it and put it on your device. I put it out on Twitter, and if it's AI, I'm playing with it. So there's a AI music company called Suno, Suno. So if you click on that link I put out there, it will get you to the Suno link, and you can sign up. And there's a lot of really interesting projects going on in the music business. It's probably one of the better AI platforms out there for music. I am an ex rock and roll player, been around. Don't play much anymore. Wish I did, just don't have the time. But if you want that, you can go get that, and you'll hear the song at the end. But it's on Twitter. I put a post out in the last day. Yeah, somebody's asked, what's your opinion on upcoming liquidity injection? I don't think, yeah, I mean, I guess you're talking about the Fed doing QE. Not going to happen, I don't think. We'll see what, I don't think the Fed has much to do with anything anymore. Yeah, so yeah, that's what you can do. Green Garden, go to Claude, grab the image that I put in the newsletter, and ask it exactly that. I would not use the VIX. The VIX is, I'll just leave it at that. I would not use the VIX. I don't see the VIX being valuable at all. I'm not saying you can't. Somebody hasn't made a good trade off the VIX. I just don't know. Yeah. So people don't know this. We'll close out here. People don't know this about me, but I am a complete metalhead. German industrial metal is my genre of choice most of the time. So anyway, so that's a little Bob Kendall tidbit you didn't know about. Yeah, hey, listen, I get that. You know, that's fine. You have to understand something, and this is why you don't hear me talking about VIX and all this other crud that's out on the street, because I don't use it. And if you figure out, folks, this will be a closing thought for you. If you figure out something that works for you, then don't watch me, don't watch anything, go do that. That's what I did before YouTube existed. All the indicators that you guys can buy, those are indicators, the PPMs we developed in 83, 84, back on a platform called CompuTrack. I mean, and we figured out stuff and it worked and we made money. So we stopped looking. We didn't try to get better. We just used that technology. And what I did was, later as technology got, in around 1992, is when I kind of moved into building models, and the technology started to change. And now we have this stuff that we have now, which is fascinating. And you can develop programs pretty easily. It's not there yet. I've actually paused from it, but there's these AI agents that you can use to build products. Replit is one. There's others. Cursor, I can go through and list a whole bunch of them, but they're not, in my opinion, they're not there yet for building like a complete platform. I've actually built some programs that do function, but on a larger scalable level, I don't think you're going to get there. There's claims of people that have made a lot of money doing that, but maybe I should probably do something like that, where I can show different techniques and things, especially if I get some success with Replit, or even do shows on how I use AI with the markets. And you have to understand, I already have all kinds of trading models. I already have process. So, but I do want to improve it, and I'm working on with an old associate that I talked to a couple of weeks ago, of pulling in a monster database that we built that I think is a gold mine. And I do want to start digging and mining that database. It's if I explain what it is, there's no one else has anything like it because it was unique to our algorithms and all the stuff that we stored and things that we know about activity relative to our algorithms and how everything goes. There's an absolute gold mine there. So, hang around, subscribe to the channel, hit the like button. There's going to be a lot of innovation, I think, from me and from some backdrop folks that are hanging around me that are going to, we're going to bring some pretty cool stuff. But yeah, so Snook, you're telling me to get some, I'm going to go eat, have an evening with my wife. It's only 6 o'clock here. And then I'm about 10 o'clock, I'm going to go to work, and I'll work from 10 to 3 a.m. So looking forward to it. Yeah. Hey, Ronald, good to see you down in Australia. I forget where you're at. I used to live in Melbourne and actually Adelaide as well for a while. Yeah. So Jack, 4.72. Watch that number. We'll see how it acts there. Hopefully it rejects because we don't want it to go through. I want to go that was the perfect rejection point, and you can buy bonds right there. That would be the preferred outcome. Yeah. Okay, folks. Just final closing thoughts is I will be around. I'm doing 2 p.m. Eastern time. We're going to bring up some of the platforms, just talk high level stuff, and we're going to try to work in, because the way that you're going to come out of this situation is to wait for market structure and start to get new ideas and how to rotate in on a portfolio. I'm bringing out the 2020 playbook, the pandemic playbook. We killed it back in those days. I mean, it was absolutely amazing. There was major opportunities. I'm not sure we're there yet, but I do want lots of folks to be exposed to this situation. Anyway, so hey, appreciate everybody hanging out. I'm going to work on take a few minute break. I'll see if I can find a couple of those clips for the Rollover movie. They're funny to watch because they're like 1981. It was terrible. The resolution is terrible, but what they're talking about, just put China instead of Saudi Arabia, and instead of cash, put bonds. Anyway, have fun. Great hanging out with everybody. Hey Zoltan, I love that. I'm gonna have to work on that one. Angle of attack. Maybe we should get the community to collaborate. Is there an echo on this? I just wonder if that got fixed. I probably did mean treasuries.